The S&P 500 and the Nasdaq 100 is what we're going to be covering on the day. We've had a lot of swings over the past few days and essentially the past 2 weeks, give or take. Now you can see obviously we pushed through this ascending triangle, broke down as we hit supply. We got a bounce locally around 11.3, and then we based essentially for 2 days from there, and then now getting a strong move to the upside. Is this based on technicals or fundamentals? We're going to break that down in depth because it's a little bit of both. So we need to be talking about that specifically here on the day. Now, before we get into that, I ask you to do two things: like and subscribe. Every single day I make videos for you so you're prepared on the market and you know what to expect based on news, based on fundamentals, based on technicals. That's what we do here, and that's what we focus on. Let's get to it. So now when we look at what's happening, as we're looking at this, there's a few things that I've been saying over the past few days. I've been very, very bearish. I've been extremely. But what is something that I said has to happen? I said we have to start getting below a lot of these big levels. We had made some good uptrend movement, right? Now, where the line really got put in the sand was right here. It was that previous swing high where we were kind of basing. We talked about this yesterday on ES and then on Nasdaq also. And what's happening now is you're seeing that we're coming down this level and we're bouncing again. So when we look at this, we need to be a little bit careful. And I recommend everyone just look at the market, be cautious. Now, even though I am in my puts, and those put positions averaging down, people in Discord already posted, some got out 40, 50% gains. I want to essentially be able to hold something for a little bit of time. I want the bigger gain. I want the big fish. I want the big catch. So right now, the position is currently down. It is down. Be transparently honest with you, 100%. I had the opportunity to get out around 40, 50%, but again, I've been telling you guys from the beginning, that's not the plan here. It's for the big swing. It's kind of what we've been preparing for. But what I want to warn you about before we go too far into anything is just things that have continue that to happen in my trading recently that have been an issue. If you followed us in December, we had some really big trades. Home Depot and NVIDIA were two of our biggest trades, right? And I highlight these two because they didn't really go our way. When we look back at Home Depot, we played the double bottom potential and the breakup. That one ran 30, 40% very quickly. And then it got rejected suddenly with the indexes. NVIDIA, we had shorts there. Those ran 35, 40%. We never got the big break until almost 2 weeks later, right? So these are things you got to think about is, are you okay with what you're risking? And that's what is different between everyone. So that's why I tell people when you join Discord, you're like, oh, well, Tyler Insider Trade, I'm going to do exactly what he's doing. That is not trading. That is, I don't recommend that. It's a losing strategy no matter what, because my risk and your risk are totally different. So when I say manage your own risk, I mean manage your position and be responsible for that, right? Don't just say, hey, Tyler, you're getting in or you're getting out. If you get a trade that's up 40, 50%, it's up to you at the end of the day. Okay, that's what we have to be able to acknowledge. So again, with myself, I have been opening myself up to more risk, just allowing myself at these times. And when I'm looking at this right now, honestly, I got to be transparent. As always, when we're here on the channel, I try to remain as transparent as possible when it's about this market. I probably should have taken profits on a few of these trades overall. I should have a lot quicker, or at least skimmed half off. I should have. But again, this has just been my plan, my focal point, and I also said it here on the channel, so I don't want to ever go back on my word on things I say here, just because that'll give us a bad rep. And I like to kind of keep my reputation here as someone who's pretty straightforward and honest. So that being said, let's talk about what's happening. You came down to our last line on ES, and I'll go into NQ in a second. And we're getting a bounce here. 1, 2, 3, 4 wicks touching on the 4-hour chart and then bouncing up. Now we got up to around 39.50 today. We sat there and we pushed above. Going into NQ, what happened here? 11.4, but you came down really till like 11.3. You pushed up. Now, if we go to some shorter time frames, you can see what's happening here. And you can see you kind of like chopped around 11.5, 11.49, and then eventually pushed up. Now, what happened here and what ultimately pushed us? Was it technicals? Was it volume? What was it? Now, I'm going to tell you right now, it's again, we still have an hour left in the trading day, but we can estimate how much volume we will get. If we go here quickly into SPY, again, this is the easiest way to measure any type of volume. We're at 61 million. I would anticipate we come in over 80 million today. It's probably going to come in around 85, 86 million, if give or take. You usually get around 20 million between the last 30 minutes and then including after hours. So I'd be willing to bet that. And it's at OPEX 8, so that's what I'd be focused on. So going from that, we're coming right back up to our level that we got rejected at before, that 11.75. And again, I'm going to be transparent and tell you, if you get above this level, you make a new higher local higher high, you look good. I'm going to tell you right now. from the standpoint, you do look good in the short term. Okay. So when you're going into short positions with time and date, you have to be prepared either to hold red and understand what could really take place in it. That's why I always say, when you're swinging, when you have fundamental viewpoints, you got to be strong in those viewpoints. You have to be strong in what you know there. So again, that's why I tell people, if you're at 40, 50%, do what you got to do. There's no harm. You can get in the next trade, etc. So going into what happened today, very clear, super easy. I want to talk about what was said here. There was two major points. Now, obviously, what pushed us down over the past 2 days is there was a change in tone about inflation, which is really important that we actually understand what's happening there. But I don't want to make today's video a repetition of what's been said here on the channel. So if you want to go watch about what's been happening with the Fed and what's been happening with inflation based on how they're lying, I recommend just go watching yesterday's video. But here we saw Fed Waller and a group of other Fed Williams, I believe, and Harker said it also. They favor a 25 BPS hike. Okay, now, this is like the battle of what we're facing. Are we going to get a 25 or are we going to get a 50? Now, no matter what, it's the same as like what happened with CPI. I don't think the day of it's going to have a major impact. Either way, personally, that's my viewpoint. Now, what will have an impact is when they start to slow down or pause rates, which they kind of gave you a visual today. And again, they said right here, Fed Waller, when reserves reach 10% or 11% of GDP, the balance sheet runoff will most likely begin to slow also. So they're also cutting and reducing the balance sheet. So not only are they raising rates, but they're also cutting the balance sheet, which usually does not happen at the same time. But right now is a special kind of moment in history. So that's what's happening now. We also had news regarding inflation. They basically said they want to have at least 6 months. So they basically said they need around 3 to 4 more months before they would want to pause, which still, I don't think the market even cares about that because we still believe there's a possibility in our heads that we could start cutting rates this year, which the Fed has just repeatedly said, we're not doing that, we're not doing that, we're not doing that. So I want that to be clear. And this is basically where we got all of our movement on the day after around 8:30, 9 a.m. You started pushing up when the Fed's members started talking all throughout the day. And that's what happened here. There was no real significant source of volume. There was no real big buying. It wasn't anything like that. VIX didn't really drop. It wasn't really crazy. Now, again, not the movement you wanted to see. I'm going to tell you that right now. Again, I think the ES chart paints you the best picture, right? We saw the levels we were holding below. We pushed down. But today's one of those days where we started seeing some real aggression by buyers, or at least short covering by some also. These are things you have to be kind of visualizing what could be happening here. Food for thought, though. As we look at VIX, you're still at very big levels and lows. Now, we could also argue this. Again, we've gone over here on the channel before, but VIX has not moved the same essentially since the S&P contracts on SPY have become 0 DTE every single day. Before, it was all from SPX, and now the SPX volume has greatly reduced when comparing SPX to SPY contracts now. Because you're not getting Monday, Wednesday, Friday, obviously now it's Monday, Tuesday, Wednesday, Thursday, Friday. I almost couldn't say all the days in the week. So that's what you have to be considering now also. So VIX is priced in with options, and we're not getting a lot of those options on SPX. So the question is, do they start recalculating this, and how do we start really seeing the movement and effects from VIX? Right now, we're just not seeing that. So that came to my attention. We read an article on that also pretty recently, so I don't want to spend too much time there either. The one thing that sparked my interest was TLT today. TLT, it's been one of the best indicators of a strong economy, a strong market. When we start bouncing, when we start getting buyers, it's been one of the best indicators. As you look here, we're looking at the 4-hour time frame, lower high being established, and we're getting a pretty nasty movement on the day. Arguably the worst day that we've had on TLT since this drop started. Yes, even beyond that major drop that we had before, this is your hard drop right now. So TLT dropping is concerning. The last time we started getting movement like this, at least gaps to the downside like this, we did get a bounce, but I will say when it started happening before, that's when we started really breaking trend. So if TLT starts getting below 105, 105.5, I'd be concerned. But as of now, I have to wait and watch what happens going into Monday. And that's going to be the biggest aspect here. So again, still have my cues, not really panicking or anything like that yet. The main thing you have to be concerned and watching for is, do you break local highs? Which right now, again, you continue to push and you're pushing up right now. It makes sense of why you're getting that buy pressure right now. Past 2 days, we had this 50-point hike is coming, which everyone knows here. I'm a bear, but I still believe you're going to need a 0.25 hike at the next meeting. Been saying it since November. But the past 2 days, we have this new notion that no, it's going to be a 50 BPS hike. Inflation's actually not moving well, which in my opinion, I don't think inflation is being handled whatsoever. I believe everything is still there. Energy is still a major major inflection point and will cause a crisis if we continue to let it hit at these levels. But we had the good news and the opposite of everything that was said. So these are the dangerous parts of this market from a volatility standpoint. Is you're moving on really terrible volume. The Fed just says random things every single day. You can go look at what the Fed is saying. It's all randomness. The only person that really is not random is Powell, but he's the one that speaks the least amount of all these Fed members. So when you go and look at these news articles and what they're saying, and I don't even want to spend time covering it today because it's just so much of the same. So we see them say, oh, inflation's doing well. Then, 2 days later, inflation's, not doing what we want it to do. So it's back and forth, back and forth. It's constantly this juggling game. So right now, it's just more of just sit on the brakes, either have your puts, get out of them when you make money. It is what it is. Okay. I'm going to say that right now. Now, going into next week, there's a few pretty big things we need to be looking forward to. The biggest of all is going to be on Thursday when you have your GDP. I think GDP will be very important. I think we need to be paying attention to it. And it's going to be at 8:30, so 7:30 Central, an hour before market open. We need to be watching and viewing this. Now, I will say right now, okay, some of this data that's come out, PPI, CPI, we haven't really had great bullish reactions to. So when I'm looking at this, I don't expect a crazy bullish reaction. Again, from my point of view, based on all these news releases or any data releases, there's more opportunity to the downside because we're all pricing in such good news and such good outlooks right now. That is just my opinion. If we look at what's happening and what moved us today, it's kind of the first time we've reacted and got some good movement from some of the things that have been said. So that is overall good news. But the question still lies, are you going to get continued volume? Because we were getting some continued volume towards the downside, okay? We had 100 million, then 86 million. And if you look back to the upside that we had, right, from January 6th, good volume, then it instantly just decreased off rip everywhere. It was very bad. So we had some decent volume on the sell side, but can the buyers actually keep up the consistency with the buying pressure? These are things we need to be looking at. A few more things I do want to point out specifically on SPY. You are trying to form a head and shoulders here, okay? This isn't me making it up. This is just showing you it is what it is. You're getting a little bit higher than that range. You're going to see it all over social media this weekend, so I have to point it out. But what I will say, and what social media and everyone's going to tell you right now, SPY is not the focus. I'm going to tell you this right now. SPY is not what's moving the market, okay? If we look at where the strength of this market is, the strength of the economy, it's all in Qs in my opinion. It's all in the Nasdaq, right? That's why Nasdaq is leading, right? So we had previously ES and Dow leading. And like I said though before, again, I try to be as unbiased as possible here. If you're going to start getting a bullish reversal, you want to see tech lead it. Okay, this is where the strength has to be. It has to be in tech. So if you are a bull, this is what you want to see. However, what I will say, if we look at what's helped continuation on some of these indexes, it's all been primarily what's happened from earnings, which we've all come back to see with Dow and energy. That's where it's been all the continuation and be able to hold even through some of the dips on Dow. You're probably not going to hold based on earnings on Qs, in my opinion. I could be wrong. Who knows what the way when earnings come out. We have Tesla next week and a few others. But earnings season really starts after this coming week. That's when you're start seeing Apple, Amazon, Nvidia, Microsoft, Meta, all of them, all the big ones, right? So this is what we need to be paying attention to: is can tech hold up through this earnings season? And again, based on demand, if inflation's really coming down like everyone says it is, you should start to see bad earnings. You should not see a good forecast of growth, right? Because inflation and demand should be coming down. But they're really not if we really look at the basis of what's happening. So this is my opinion, what I'm watching here in the market. Again, I think, yes, SPY might be making a good pattern. But again, what's leading the market is not SPY. It's the Nasdaq. Tech is finally leading the market. So again, if we start making a higher high here, I think we have to be a little bit cautious and say, look, highly likely if we break above 285, we're probably going up to 295. So at that point, you start to say, probably cut the puts and then just reestablish the position down later down the road if the opportunity is there. Again, I try to stay as transparent, as unbiased as possible, but that's what I'm looking out for here. That's what I'm looking for here in the market. If you have questions, ask down below. I'll probably have a video coming out tomorrow also, which doesn't usually happen on Saturdays, but be on the lookout. Have a good one.